Good afternoon, good morning, and good evening to all of you around the world. This is the Smoking Barrels inaugural 2023 presentation. I'm Rustin Edwards, based in Geneva, and with me is my ever-present foil in the marketplace, Matt Stanley. Good morning, Matt.
Happy New Year. Happy New Year.
Happy New Year to you as well.
And this is the first year ever in history that I've actually ticked off a New Year's resolution, because my only one this year was to get the barrel back up and running, and here we are. So change happens.
16 days in, check that box. Good.
Done it, mate. 2023 is going to be a blinder the way I'm going.
Well, with the amount of traveling you're doing, you're basically doing your share to help keep jet demand up and running.
Yeah, I single-handedly took it upon myself in the second half of last year to make sure the middle distillate part of the barrel was going to yield some profit for every refiner in the world. But no, it was good. Look, I mean, I think, just start with that. I mean, I think 2022 was a year of reunion and people getting back together and remembering what it was like to be in a conference or have a drink or, whatever it might have been. But I think people in the end kind of went, well, I only saw you like last week and we're in the same conference and doing the same thing. So there needs to be a bit more of a balance this year, I think. I think people have calmed down a little bit. Look at the purse strings, because I think there was a lot last year of people going, do you know what? I don't care. I'll worry about it next year. And, that's why we saw inflation go where it was. So I think it'll all calm down a little bit this year.
Well, as you said, from the travel perspective, I mean, I think the biggest story out so far this year has been the reopening of Chinese borders on January 8th, as announced by the People's Republic of China. The Transportation Ministry of China saying they're expecting to see over, I think it was 2 million or 200 million trips, individual trips over the Chinese New Year holiday, which kicked off today for travel. And I think already registered 43 or 44 million individual trips inside the country.
Yeah.
That's giving us the necessary boost in demand, or at least perceived demand, in order to get the bulls back into the field and let them run wild.
Yeah, I was a bit concerned that, because I mean, I found it personally quite shocking that, after some fairly modest protests from the people within China against COVID lockdowns and zero COVID strategy, that the government relaxed the rules as quick as they did. But it's a good thing. But I think when, of course, the inevitable wave then hit Shanghai and Beijing and Guangzhou and all these different places, that I thought they may revert back into a lockdown, but they haven't. I know that's, the humane element of that aside, people unfortunately who weren't in good health passed away. But look, it's for globalization, for trade flows, and for people coming back, and probably for Yves Saint Laurent handbag sales, it's a good thing. So, Dubai Mall is there, literally rolling out the red carpet this week, I think.
Well, I think from the case of the wave increase, I mean, the concerning thing I see is that the actual lack of data coming out of China. I mean, this weekend they did release that they have had 60,000 COVID deaths since December, which again, that's based on their new definition of what a COVID death is, i.e. somebody who has died, his primary cause of death was COVID, not a comorbidity or something else like a lot of other countries have gone to include. And I really don't think the actual numbers will really come out until later in the year, if not years from now, when people can actually look at excess deaths, which I think is the Western standard that they've gone to, is excess deaths being above the normal 5-year mean. The COVID wave, I think markets have generally got a bit ahead of themselves on the rally, mainly because it's really unclear yet as to how demand in China will develop with the amount of cases going on and how many people call in sick and don't travel for Chinese New Year and travel after Chinese New Year. I mean, I think if anything, in my thought, the COVID story in China is a story of halves. First half of the year, it's probably going to be hit and miss. Second half, probably going to be better and probably show better demand profile.
Yeah, I think you're right. And I think I think look, at the start of the year, well, at the end of 2022, and then, you know, China's going to reopen. Everyone went mad, and it was a little bit overdone, like you said. And then flat price dumped in the first week, and everyone thought, "Oh, here we go." And your $30 oil calls for Q1 were looking good. Yeah, scrap that. That's off. Done that. Off everything. Back we are at near close to $85 a barrel. I mean, it was a whoosh. And I think you're right. I think that's, you know, the market digested it a bit too greedily, as we do over Christmas. And then, you know, Blue Monday, as it is today, things are back to a bit of normality. You know, I think you're right. I mean, I can't really see what's going to pull unless proper data starts trickling in from the Chinese government. You know, in terms of, because they're under pressure from about every authority there is. I mean, the WHO are refusing to believe any of the data they're giving, but it's all allegedly. Don't blame the barrel. We don't know. We know as much as you do. But yeah, look, ambiguity reigns. It always will with Chinese data. That's the problem. It's how you translate it into a trading strategy.
That's true. But then but the other side that you had that provided more, in my opinion, probably more of the bullish impetus was the fact of the CPI data that came out on Thursday of last week from the United States, because everybody has been always concerning about, you know, how a recession is going to develop, how hard is the recession going to be, not only for the U.S. but the euro and also for Asia, because that directly drives demand. And with the CPI data that came out showing that core inflation only went up 0.3%. Headline inflation actually dropped, which was also due to the fact that the headline inflation dropping was due to the fact that energy prices have come off so much from their high in December.
Yeah.
Ended up with a much stronger bullish move on global currencies, a big sell-off in the US dollars, and basically your entire commodity sector, from hards to liquids to softs, all rallied. I mean, you can even look at coin trading now over $20,000 after sitting around $16,000 for the better part of December, all with looking at going risk on, with the fact that with the assumption that the U.S. Federal Reserve is not going to increase rates past 5%, and they're going to start pivoting in Q3.
Yeah, well, this is the thing, and you know, I was kind enough. The guys invited me back on the radio on Friday, and you know, one of the stories they wanted to talk about was that the Dubai government has reduced the dirham per kilometre fee the taxis are charging, and now you're seeing. And I think you're right. I think it's a bit of a poison chalice. You know what's happening with inflation data right now, because you're right. It's all about energy and energy prices. I think it's a false dawn. You know, it corrected Q4. It was quite a brutal quarter for energy in general. I personally can't see oil getting much lower than it is. You know, it will go up again, I think, this month. But yeah, it's how fiscal policy adjusts to, you know, all these inflation data points coming in all over the place. Because what was it, a 15-month low, I think, inflation last month in the US. And like you said, the market jumped on it. You know, has it peaked? Are we at the end of it? Are we going to start seeing interest rates come down Q3? I think that's way too early, in my opinion. But
well, according to the Federal Reserve, that's way too early as well. I mean, they're talking no pivot. You know, expect to see interest rates hold for a long period of time. I mean, you look at speeches from you know, all the different Fed presidents, and they all basically the same thing. You know, higher for longer, not any pivot anytime soon. I mean, the ECB is saying the exact same thing, yet people are still saying the ECB is going to pivot in Q3. So I think you got traders who are getting a bit more exuberant around loosening of the purse strings from the different economies versus sound fiscal policy in order to help economies stabilize after all the stimulus from COVID, after all the stimulus that's been in place since 2009.
I mean, I was listening to a few of the, you know, federal committee members talking. Look, it's their personal opinion and what they're forecasting. The thing is, you can't have anything as fluid as monthly central bank meetings if they don't react to data and adjust policy accordingly. So the higher for longer agenda that these guys seem to be on, that drive they seem to be on. What are they saying? That inflation is embedded, is entrenched? I thought that wasn't the case anymore. Mr. Powell said it wasn't, and we must believe what he says. I don't know. Look, I think you're right. I think this is a year of two halves, and we're still on the recovery. People will bank on China, and then second half people really need to start seeing things ring true. I mean, you can argue that that's the same every year, but the one thing that people have been waiting for the whole of last year was, when did China reopen? And it's now. And if demand doesn't get the boost, I'm talking energy specifically, oil doesn't get the boost from a bump up in Lunar New Year travel, like you said, then I don't know, where does it go?
Well, I think it's really going to be a case of how strong does China's economy really come back? Because remember, prior going into the COVID lockdown, the Chinese economy was in a slowdown mode. They had having a lot of the issues around their construction, with the construction companies, the home builders, all having their financial difficulties, and they're still having their financial difficulties around assets.
Evergrande.
Yep.
Where are Evergrande? Whatever happened to them? Are they still going?
I believe they still are, but they still have a lot of problems with the assets they have on their books.
Oh, that's okay. They came out 2 weeks ago and vowed to repay any debt. Okay, thanks. That's fine. Yeah. They're fine. No problem. Nothing to see here. Move on. We will repay it.
But nevertheless, I think the big question when it comes to energy markets and pricings, the next big looming issue is the pending Russian embargo into the EU for products. When you look at the total product flow that comes out of Russia into the EU, you talk about 1 million barrels a day of gas oil, 700 million barrels of fuel oil, residuals, and then you've got your naphtha on top of all that. That's a lot of molecules that need to find a place.
Yeah, it is. And it's I'm just looking here on our fancy system that we have here, but there's no plugging on this podcast, Edwards. It is how much diesel and gas oil that Russia imported into the EU in, say, December. So bear with me. I will tell you.
We're big numbers.
We have ways and means.
What I saw.
Yeah, so December was 28 million barrels of the gas, oil, and diesel from Europe into the Russian. Now that was a record high over the last 2 years. Yeah. So what does that mean? Does that mean everyone's trying to get rid of everything as much as they can, or does it mean that people are stockpiling, or they're getting rid of all product that they can? That's a gargantuan amount of distillate.
Well, if you remember, though, stocks in Europe have been fairly tight. So at the stock level was something that needed to be done. So I think there's a lot of buying of oil just in preempting the embargo and any price cap action, because at least then you're getting oil into the system. Now, the flip side is Mother Nature has helped out tremendously so far this winter in keeping the winter relatively warm in Europe. So not only gas oil stocks grown, but you've also had nat gas stocks not get hit as well. And so I believe Germany was recording nat gas levels at 91% of capacity. So they've actually built over the last 30 days. Gas stocks in the EU, I believe they were up 10 million barrels week on week, which is.
And is it that? I mean, you're in the heart of it there. Is it that mild? Has it been a mild winter?
Oh, it has been. And when you look at the pictures from Davos prior to this week, last week when school came back into session, the snow hit. So all the people
obviously
had a disappointing winter ski holiday season, but now we've got snow falling pretty much every day for the last 7 days. But when you look at Davos at the beginning of the year, green fields. So a lot of your lower elevations here in Switzerland and in the French Alps and in the Italian Alps had no snow.
I hope Greta's not going. She'll just stand up and say, "I told you so." Every leader.
That's great if it's on the European side. You flip the page, go out to the United States, and you look at the Sierra Nevadas and you look at the Rocky Mountains. They got more snow than they know how to do with right now.
Really?
So it is kind of a flip of a page, and Mother Nature giving the Western United States a bunch of snow, which they need because they need the water. And then, we're now getting the snowfall here in Europe. So, it is a case that snow will pick up, and then that will also mean gas oil demand will pick up as well. But when you think about rebalancing of how the markets are going to move, I stated this last week as well, that, I see that freight rates are probably going to start moving up higher again, just on the back of longer ton miles. Because if Russia is able to place all of their products in markets, those markets are going to be Latin America, it's going to be Africa, it's not going to be European Union, which is, a day to 2 day voyage away. And so if you
look, just going back to your weather point, I was freezing. I did the school run this afternoon, and it was 24 degrees Celsius. Freezing. I didn't know what to
long
do.
shorts.
Yeah, exactly. No, but this change in trade pattern that we will see, and that we're starting to see already. Yeah. Okay. Look, imports into Latin America and South America, that's going to have an effect on everyone, because that will affect the Gulf Coast refiners. That ARB isn't there anymore. But there's no way that Latin America and West Africa, for example, can absorb what Europe used to. But there has to be a cut in runs in Russia. There is no other option.
Well, it is a case that if you took West Africa and you took all of Africa, because all of Africa are diesel importers for the most part, and you take all of South America, which were mainly diesel importers for the most part, you do end up almost equal in balance between what the Russians can move out as a demand side versus the supply side. And so if you back, what ends up happening is you end up with, you don't have enough ships to move the volume.
Well, then what? Go on. Sorry. Go on.
So the longer ton miles will impact the ability of Russian refineries to run full out. So I do think you're right. I think we will see Russian run cuts happen, because it's easier for them to transport incremental crude to the market and have that crude get refined into gas oil and products, and those products from wherever refinery takes the crude, exporting out into the marketplace. I think that is a far more logical step to happen than seeing Russian refinery runs maintain where they're at. The only problem Russia ends up with then at that point is not having enough diesel to supply their military activities currently in Ukraine.
I mean, this is the thing, and it's I'm just looking at it. That's all very well, but the people who are supplying that at the moment, well, they get kicked out and priced out of the market. So where do those barrels go?
What, the barrels going where?
Going to West Africa right now.
Well,
So it's coming from ARA.
Well, when you think the barrels that go to West Africa usually came from European refiners.
Yeah.
Now you lose that Russian flow coming in, so therefore your European refineries have to supply their own self market. So they can't. They're going to have to run as hard as they can in order to meet their own demand.
Does that add to the inflation argument?
Well, it does have to, because longer ton miles means freight has to go up, which then translates into the cost of goods for everybody. So it will be an energy driven. I think what we'll see is that as we go into Q1, we will see an energy driven inflation move.
Yeah.
Which will translate into all the products and all the goods that move at sea. And then then just add up to what the consumer has to pay at the end of the month. I mean, if you look,
cool, mate. Sorry.
If you look here, that Europe will have to produce roughly 4.5 million barrels a day of gas oil to meet their own internal demand, and they don't do that unless they're running refineries at 85 to 90% utilization rates, which are well above the historic average that the European refineries run at.
Okay, because I'm just looking at African monthly imports from Russia of gas oil and diesel. So January 2022, there are 1.35 million barrels of gas oil and diesel from Russia into Africa. In January 2023, it was 4.8 million.
Yep.
And that's obviously, it's 4 times. But it's where it is. This is what I mean. This is, where's it going? So it's going into the Mohammedia refinery in Morocco, and it's going into Tangier. Is this just a place where people are storing it, redocumenting it, and sending it back into Europe? Because that's the shortest geographical way to do it. Well,
that could happen. They can also be just storing it there to actually move into West Africa and supplement the European flow into West Africa. Yeah.
Yeah, I mean, look, this is. I know I shouldn't find it fascinating, because the whole reason that we're in this crap situation is because of what's happening and the conflict, which is just awful. But it's a paradigm shift for the energy market in Europe, isn't it?
Oh, it's a paradigm shift for the entire world. Because if you think of your U.S. refinery, you're no longer going to be exporting your oil to Latin America. You're exporting your oil now back to Europe. And so you see the trade flow of gasoline coming from European refineries into the U.S. East Coast, and that ship moving down to the Gulf Coast, loading up a cargo of gas oil to go back to Europe.
So what is that? What is that? Because gas oil cracks, we were talking about it just a short while ago. Gas oil refining margins are still elevated and should stay that high because the demand is there, and now it's an organic. They're supplying themselves organically.
Those margins should stay there until we see what the redirection of flow looks like. So they should come down at some point and normalize at a point which allows the arbitrage flow from the Far East into Europe. Okay. And maintain maximum runs in Europe because you need those maximum runs. Otherwise, you need to count on more flow coming into Europe. So if the margin stays too high on the local refining barrel, that'll just keep ARBs open even more, and you'll see more and more larger flows of gas oil from Asia into Europe.
And what's happening with power generation? Because there's a sitting demonstration right now in Germany in a tunnel.
Yep.
What I don't get is, I mean, fair enough. I know the green agenda, and I know I'm a grumpy old man, but Germany needs the power. It needs the fossil fuels to give it that power to call people, to heat people up, or get people into schools, or whatever, for whatever reason it might be. That's why I don't agree with these protests, but they're firmly going down the coal route, right? They're firmly on the coal route, and other people are looking more and more at high sulfur fuel oil, right? In Europe.
Theoretically, yes. I mean, the difference between coal and oil infrastructure is tremendous. So if you have a utility, which, I mean, if you look at the prices that have developed on natural gas, because natural gas was the primary fuel source for most of the utilities in Europe, the price to incentivize shifting from gas to liquids happened in Q3 of 2021.
Yeah.
Gas started moving up higher. Gas oil prices, fuel oil prices remain flat, and you ended up with that price inversion level, which would make sense to make that switch happen. Because you're switching from A fuel to B fuel, you need to have the internal infrastructure to make that happen. You got to have a tank. You got to have a truck rack. Now, I know in the history, when refineries repowered to another fuel, they basically, killed off any investment in maintaining the storage tank that they once had for 1% sulfur fuel oil because, I'm doing nat gas. Nat gas is plentiful. I'm not going to spend money on a tank that I'm never going to use again.
Yeah.
And so you ended up with, I don't think you saw the large amount of oil to gas or gas to oil shifting that people were predicting because the infrastructure wasn't there to make it happen. I think in places where you could make those changes, i.e. a refinery, a steam cracker, because you have access to those fuels, you have the tanks already, they're part of your refinery infrastructure, therefore you can make it work. I think those shifts happen. And that probably equated to like 100,000 barrels a day of demand shift between nat gas and oil. But now when you're talking power gen and coal infrastructure is far easier to maintain because it's a conveyor belt.
Yeah, absolutely.
But as we look going forward, where do you think markets are going to be going here in the next week or so? What's your prediction?
Well, where are we? 85 on the dot right now for Brent. What have we got coming up? I mean, we had a gargantuan build on crude stocks last week from the EIA. I think it was the third biggest.
Which was fully ignored by the market.
Yeah, totally. Now, what's that stats? Don't worry about those. But it was the third biggest build in history. We had the two others. The first one was COVID, and what happened there, obviously, when people were paying people to get rid of oil. And the second one was after Texas was frozen. I mean, they're two news stories that when I think about them now, I just think, Christ, what a couple of years it's been. I think that needs to get itself back on track, just merely for, to continue this upward path that Brent has been on since about the, end of
since 3 days ago. since
Well,
3
yeah,
days
but
ago.
I mean, last week it had a good week. Last week was it highest weekly gain in a few months. There seems to, I mean, 2023 seems to have started off on a good foot if you're a bull in all markets apart from the dollar. But arguably that was overvalued anyway. There was some correction that was possibly coming. Yeah, I think that for me, the story that needs to be followed, if not on a weekly basis, on a daily basis, is what happens to gas oil price. I think, as you said earlier on, with the nat gas crisis in Q4 2021, the minute that you see there is any disruption in power generation feedstocks in Europe, it drives the whole energy complex higher. And I think the case study for that right now is what's happening on the gas oil markets. I think that will continue its strength. It's been flirting between what, 880 and 950 a ton. This is IPE gas oil, low sulfur gas oil. I think that's what's going to be the driver. I mean, gas oil cracks are absolutely roofing today. That's what I've constantly got my eye on. But the other thing as well is obviously your part of the world, Edwards, what's happening with freight. And like you said, data is starting to trickle in. Our analysts who are brilliant, but I do feel for them because the whole world's asking them, so what's going to happen then? Come on, you're the ones with the big brains. And they're like, I don't know. Leave me alone. They're just in a corner of a room crying, thinking, well, it's just such an unprecedented situation. But this is when heroes are made, I suppose. But no, I think what happens with freight, and I think then maybe that sort of story would be plagiarized out into the wider energy world in terms of this fracturing of markets. You'll have the compliant people in the market, and you have people who won't care and will flirt with that sanction line. So I think they're the two things I will probably keep my eye on every day this year.
Well, that's I think, a pretty good summary on the energy side. I mean, we do have Davos going on right now, so there's going to be a lot of headlines are going to be leaking out over the next 5 to 7 days of who spoke and who said what, where, when, and why. So I'd be very keen to listen to the different politicians and business leaders who are going to be speaking about where they perceive the economic condition of the world at. I mean, look at last week, we had the World Bank saying GDP growth for 2023 at 1.7%, whereas you had the IMF saying 2.8%. So to have those two august bodies diverging that much on where they see GDP growth at tells you where the market is in relation to everybody else on any position out there, go higher or lower.
Well, this is it. I mean, and that's a good point. And I think that summarizes things very well, because you've got a Davos in Switzerland where there's no snow and that there's still a green agenda.
There's snow now.
Oh, there's some snow now. Okay. A dusting, as you call it in England. And then you've got the Davos in the desert, right? Which happens, I think, in October every year in Saudi. And it depends where in the world you are. Everyone will have a different opinion based on geographical location. Arguably, with what's happening with the lack of fossil fuels that the world is threatened with, the Middle East will boom. The GCC core will boom. Balance sheets that are guided by high oil prices and government but budgets that are balanced on the same, it's a good day, and Dubai is booming. If you're sitting in, like I said, sitting in Switzerland, or you're sitting in England, and you're thinking, I've still got inflation at 10%, your economic outlook is a lot grimmer than it is in the Middle East. So I think that, China needs to come back, ironically, and kind of link everyone back together. Because since they shut, everyone had to get on with each other again, and they clearly don't get on well with each other. So China's kind of that conduit. Hold up, we'll hold your hands, boys. Come on.
Well, that assumes that China is going to come back being the eye of the center of all production for everybody around the world. And if that happens, then probably. But I'm not so keen to see that, or not so positive to think that that's going to happen. But
yeah, I share your skepticism. Yeah.
We come to the end of the first edition of the Smoking Barrel for 2023. We look forward to continue this next week. So catch us
Yeah.
next.
Like and subscribe. Like and subscribe.
And that's Matt Stanley. And we bid you a fond farewell. Happy trading.
Peace.